The news is pretty unreliable when it comes to unbiased commercial real estate data, and the mainstream media tends to cherry pick some of the worst and scariest information out there to get people's attention. But even though the reality of the situation in this business today isn't as dire as news outlets will lead you to believe, there are some major things happening and potentially about to happen across a lot of the commercial real estate industry in the very near future. And in this video, what I want to do is step back and walk through some of the most important pieces of information that you need to know if you're looking to get into this industry in 2024 and what might happen going forward if these things continue to play out over the next few months. So the first thing to note here, which is very relevant for people looking for jobs in commercial real estate today, is that transaction activity is still well below the transaction volume we got used to seeing from about 2015 up through 2022. In Q2 of this year, US commercial real estate investment volume came in below $100 billion for the sixth straight quarter, according to CBRE, and according to Newmark data, total investment sales volume in the first 2 quarters of this year was the lowest we've seen in the industry since 2013. And because of this lack of transaction volume, hiring across the industry as a whole, especially for jobs in acquisitions and investment sales, has been extremely slow, meaning that if you're watching this and struggling to find a job right now, you're absolutely not alone. And this is the case for a lot of young professionals today trying to break into this industry. And while upcoming loan maturities are starting to make investment sales more of a priority for property owners, we're still not seeing a huge uptick in sales volume as a result of this yet. And with where interest rates are today and what buyers are willing to pay for deals as a result of those rates, if property owners don't need to sell right now, they usually aren't going to. But with that all said, this all may start to change in the very near future as loan maturities start to pile up and more property owners start to find themselves in situations where they're forced to make some really tough decisions related to these as a direct result of what's being referred to in this industry as extend and pretend strategies that are starting to come to a head. According to Newmark research, loan maturities across the commercial real estate industry are scheduled to total $929 billion by the end of this year, up 41% from early 2023 projections due to extensions granted by lenders last year that pushed back these maturity dates into 2024, and with another $573 billion of loans scheduled to mature in 2025, this is when things could start to get interesting. And while loan maturities are a natural part of the real estate cycle, what's alarming about this is that almost a third of all securitized commercial real estate loans maturing over the next 2 years have a debt service coverage ratio of less than 1, meaning that their current debt service costs are actually higher than the net operating income the properties are generating, with this being the case for 25% of office loans, 37% of industrial loans, and 43% of securitized multifamily loans maturing before 2026. And when these loans do start maturing, this is when investors are going to start to have to make some really tough calls, either investing fresh equity into these deals to make up for new loan proceeds that in many cases won't be enough to pay off the outstanding loan balance. And for investors that don't choose to go that route, this is where distressed property sales could start to pile up. And a big reason why these refinances could end up being so difficult is that unlike the interest rate environment that most of these loans were originated in, with 3% and 4% interest rates being relatively common, most commercial real estate loans today are being financed at rates between roughly 5.5% and 7% or more, which is significantly reducing proceeds that lenders are willing to issue. According to CBRE, in Q2 of 2024, almost 40% of commercial real estate loans over $10 million were financed at interest rates above 6%, and for commercial real estate loans of less than $10 million, over 80% of these loans were financed at rates of 6% or more. And as a result of this run-up in rates, over the last 2 years, the average loan constant, or the total annual amortizing loan payment as a percentage of the outstanding loan balance, has shot up from 5.4% in Q2 of 2022 to 7.3% in Q2 of 2024, which has put a significant amount of pressure on investor cash flows and is starting to cause a material amount of distress in the industry even for properties without near-term maturities. According to CredIQ, the distress rate for collateralized loan obligations, or CLOs, jumped to 10.3% in July, which is up from less than 2% just 1 year ago, and includes any loans that are more than 30 days delinquent, loans that are past their maturity date, loans that are special serviced, or any combination of these three things. And many of these issues are directly related to floating rate loans with interest rates that might be 400 to 500 basis points higher than they were at the time they were originated. And even if the Fed does cut rates starting later this year, the market is still only projecting the 1-month SOFR, or the index rate used on most floating rate commercial real estate loans in the US, to drop to roughly 3.5% over the next year, and with spreads on many of these loans coming in at 250 to 400 basis points, this still might not be enough to provide relief to these borrowers. Now, one bit of positive news for property owners today is that it is looking like investors do believe that interest rates will fall at some point within the next year, and this has been reflected recently in what appears to be somewhat of a stabilization of real estate cap rates. At the end of July of this year, CBRE released their semi-annual H1 2024 cap rate survey, which polled over 250 transaction-focused professionals at the firm and found that cap rates in most markets held steady in the first half of this year. And according to data from Newmark and Real Capital Analytics, cap rates for apartment, industrial, and retail properties actually decreased slightly from Q1 to Q2. And this is very likely not only due to a positive market sentiment on interest rates, but also due to expectations of improving real estate fundamentals overall, with excess multifamily and industrial deliveries expected to taper off significantly over the next few years, and retail deliveries and availability rates at some of the lowest levels we've seen in over a decade. And as long as the economy continues to grow and populations continue to increase, demand for all commercial real estate product types, with really the exception of office and a lot of markets, should also increase, pushing rents and net operating incomes higher at a time when cap rates could also finally begin to fall. Ultimately, the things happening in commercial real estate right now are starting to force the hands of investors to either sell or give back properties altogether. And if rates start to fall towards the end of this year and the market starts to get some more clarity on pricing, we should start to see an uptick in transaction volume over the next 12 to 18 months, which should also lead to hiring in this industry finally beginning to pick back up. And if you're watching this right now and you are looking for a job in commercial real estate today, and you want to make sure you're ready for the interview process and a potential Excel modeling exam that might be given to you at commercial real estate investment, brokerage, or lending firms, make sure to check out our all-in-one membership training platform, Breaking a CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking a CRE Analyst Certification Exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on the state of the commercial real estate market, make sure to hit the like button and let me know. And let me know in the comments if there are any other specific property types that you'd like to see covered in more detail in a future video on the channel. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.